Hello, everyone, and we got some exciting news for you. After all the hubbub, it does seem like Cardano is getting native USDC. I do think Charles isn't very happy about it, but I'm happy about it because it gives us a lot of liquidity. And people have informed me that in smart contracts, there is already a clawback option, so I don't really see the huge problem here. It looks like the voters overturned Charles and what he wanted and voted for to get USDC on Cardano. I think Charles wanted USDM. He wanted to do his own thing in Cardano, but we all know that if you just create a stablecoin, it doesn't give you the liquidity that USDC or USDT does, and that's why we really wanted USDC. I can't say for sure, but it does seem like on Twitter someone has the inside scoop. Maybe they're leaking it, but they're saying, without giving away anything, which annoys me because I want to see the receipts, USDC is coming to Cardano. And of course, I'm happy about it because we need options. And this will only pertain to transactions on USDC. They want an 8-figure sum, but that's $10 million. And there's easily enough funds in the Cardano fund to pay for USDC. We've been talking about DeFi growth on Cardano for a very long time. Now, I still don't know a date, but it looks like it is going to be very, very soon. We still don't know a date, but it's going to get the liquidity. And I think one of the reasons that Solana has grown so large is because it does have USDC. It's critically important to have a big stablecoin on your network so people can use it to trade in and out, and you can also use it to trade DeFi, and people also have a holding coin without actually having to cash out. That's something that Cardano has been sorely missing, and USDC will give you that option. You're thinking, what about ZED and all those? Those aren't fiat-backed stable coins, and even though they are stably pegged at $1, there's not enough of them. You have to have the liquidity, you have to have the amount. ZED is over collateralized by 400%. It is incredibly, incredibly hard to actually expand when you need a 400% collateralization because people need to put up the money. The one-to-one collateralization is much easier, and you don't have to worry about the volatile market if you're backing something with $1 rather than with a volatile crypto. We know how much crypto can dump with respect to the dollar when there is a dump. You know, if you buy a lot of crypto to collateralize during the bull run, even if you collateralize 400 to 1, you can easily just lose that peg because you don't have enough collateral in the bear market. With $1, you don't have to worry about that, mainly because everything's denominated in dollars. And unless you get hyperinflation, which is, I don't think, coming anytime soon, you are generally A-okay for the most part. When it comes to market upturns and downturns. So that gives people a more solid, a more stable option for stablecoins, and one that can grow really fast because it doesn't rely on massive, massive amounts of over collateralization to ensure that it's actually stable. So that is incredibly good news for Cardano. And I'm very, very bullish for MinSwap because of what's actually happening right now. I think this will help MinSwap even more than Cardano. It should definitely pick up the volume on MinSwap, which will actually make the coin worth a lot more. I think 50 cents a dollar is well within the realm of possibility for MinSwap if we can get a good supply of USDC on the Cardano blockchain. Remember, MinSwap, they just did a big coin burn. They only have 3 billion supply left, and at 50 cents, which is over 10 times what it is right now, it's only $1.5 billion market cap. For being the biggest DEX on Cardano, I think you can get to 50 cents, $1 if we play our cards right, and that's really what we're after, especially for the Cardano MinSwap pair, and I think that will actually be awesome. Another piece of good news is the Spot ETF volume has passed $10 billion. And yes, there's actually positive net inflow. A lot of it has been the grayscale outflow, but that's actually slowing down. But it seems like the demand for Bitcoin is riding very high, and it is still very, very strong. And this, even without the grayscale volume, goes way, way, way over any other ETF that's actually been released this year. So basically, like, it's insane that an ETF gets $10 billion even as GBTC sales slow, and GBTC sales has been the ETF. So the thing is, like, Bitcoin new ETFs have caused controversy with frenetic trading activity having little tangible impact on BTC price growth. So while some are wary as a result, fellow Bloomberg analyst Eric Balchunas argues that raw figures speak for themselves. So to put it in context, there's 500 ETFs launched last year. Outside, well, I mean, I guess they launched like the Bitcoin one launched in 2024. Of all the 500 ETFs combined in 2023, they did a combined $450 million in volume. The best one did $45 million in volume, and many have had months to get going. IBIT alone is seeing more activity than the entire 23 freshman class. IBIT is BlackRock's. Grayscale actually has the most volume, but a lot of that is actually people selling because they did buy at the bottom, they had a discount, and now they're cashing out on the big gains. But even without Grayscale, you can look at this graph, the GBTC outflows for the first 3 days were a little over $1 billion, but BlackRock by itself had inflows of 750 million, and then BlackRock plus Grayscale would actually equal, BlackRock plus Fidelity pretty much equals or slightly surpasses Grayscale's outflow, and the rest is just icing on the cake. So basically, like, GBTC outflows, they had 1.18 billion outflow versus spot Bitcoin ETF inflows of 2 billion. So the net inflow from the ETF is still eating into the OTC because the net inflow is still $0.82 billion. And just that $0.82 billion is nearly twice the entire ETF volume for all the ETFs that debuted last year. So don't tell me there's not don't tell me there's not a lot of demand, because there is massive demand. So like, and they're saying that GBTC sell process is actually slowing down. GBTC sell pressure won't be a long drawn out process. Many just cannot sell because the tax hit is too big, and eventually Grayscale must capitulate on fees. This is likely to be sooner rather than later. GBTC is losing customers, and the fees is a real thing. GBTC fees are like 1 point something percent. The rest of everything else is like 0.29%. If they don't want to lose out on the customers, they will have to take down the fees and roll back the fees, which is exactly what I expect them to do. And I do think, like, as the Grayscale sells slow and other ETFs still want to lap up more BTC to support their ETF, I do believe the price will definitely go up. Now, yes, the price is still at 42,700. There was a little bit of buy the rumor, sell the news, and then Grayscale amplified that. But now, since I think most of the Grayscale selling is out the window, and miners have already sold down to almost their lowest reserves in like a couple of years now, I do think the time is actually approaching where we're going to go up before the halving. So I do actually predict an upward move before the halving rather than a downward move before the halving. That might be kind of fly in the faces of a lot of the charts people, but what I'm seeing right now is that the big funds and the big ETFs want to actually buy Bitcoin, and a lot of the sell pressure is sort of abating. Of course, you know, there's like the Silk Road stuff, but that's another matter altogether. I don't know like when or if they're going to plan to sell that anytime soon. And last of all, but definitely not least of all, the SEC got smacked down at its trial hearing with Coinbase. Yes, the judge would seem to be on Coinbase's side, and she was very, very leery of the SEC's claims about how everything is a security. And she basically said, I think your definition of a security is too broad. Now, Coinbase did really screw up once when they asked about Solana, like, you know, if people bought Solana and it goes down in tanks, do the people actually have an action against Solana? And the guy said, yeah, maybe it was fraud. And the judge is like, well, if there's not a contract, how can you actually do that? And then like the Coinbase guy had to go back and be like, no, I mean that a tort, not so much as fraud. So they kind of cleared that up. Then they got back on the same page. And of course, they said that the judge basically said that, yeah, you know what, the old securities laws, they were back in 1933, they seem a little bit outdated, and maybe it's time we rewrite the Howey test. And she also said, I am concerned She said to the SEC, I am concerned what you're asking for is to broaden the definition of what constitutes a security. And the SEC has been trying to stretch the definition of a security forever. The judge did not seem too pleased with that. And also, she did bring up the Hinman case and other rulings as well. So she is very, very well informed on this case, and she seems to understand more of the technology behind it. Although she did refuse to give a bench ruling. What that means is she didn't rule on the spot, and I don't think anyone really expected her to rule on the spot. Most likely it's going to resolve in 2 to 6 weeks, so about a month before resolution could come anytime between the end of January and the end of March, beginning of April. My birthday is the beginning of April, so it would be a nice birthday present from the judge if she smacked down on the SEC. She could also dismiss part of the case and let the other go to trial. And she actually said that the whole SEC case against staking was very, very poor. So essentially, like, she might dismiss the staking part of it and then let the is this a security part of it on the secondary market or not go to trial. But I think even if it does go to trial, go to discovery and everything, I think the SEC will lose. Coinbase will definitely subpoena the documents that Ripple subpoenaed during their lawsuit. And I think the SEC is definitely heading for a big L. And the SEC must be aware of that, but Gary Gensler is stubborn and he won't give up in his regulation by enforcement, which I think will definitely hurt his reputation in the long run. So the thing is, like, she didn't say whether she would dismiss or not. A lot of the experts say, like, I think she was on the side of Coinbase, but there might be just enough doubt to avoid dismissal. I hope they're wrong about that and she does dismiss, but I'm not getting my hopes up too high. If they dismiss the staking part and let the rest go to trial, that would be only a partial win and not the part that I actually care about. But it is not a loss if it's not dismissed. It just goes to trial. And I do believe the SEC would actually lose at trial. So the thing is, like, I hope I'm wrong about that. And the closing argument from Coinbase was very strong. The commission's complaint draws the court into completely unprecedented territory. The SEC should follow enforcement and rulemaking actions that make sense of regulatory language and don't twist it upside down. This is several bridges too far, and for that reason, we ask you to dismiss the SEC case completely. So I hope they actually win, but I think it will be a slight partial victory with the main part going to trial, which Coinbase will actually win, but it might take a year or two. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.